Welcome to another episode of CannaBiz with Canna-Chris. I'm Chris Nanny, also known as Canna-Chris, and today we'll be talking about the when, what, and why of investing with cannabis businesses. As always, I'm accompanied by my good friend and co-host, Austin Slutsky.
Love being here, Chris.
Thanks for being on the show, Austin. And without further delay, let's get started. Austin, what's new in cannabis?
So we got some wonderful news from Tony Evers, the governor of Wisconsin, who just put decriminalization in his budget.
Ooh. Okay, so what's it looking like? What's the bill like?
So the bill will permit medical use, it'll decriminalize possession, and align all the state's laws on CBD oil and hemp with the federal standards laid out in the 2018 Farm Bill.
Okay, this sounds pretty progressive. What are the chances of it passing?
Probably not so great. Even though Tony Evers is a Democrat, basically the entire rest of the legislature is Republican controlled, so we're a little less likely to see some of this progressive legal action in the, near future.
I know that quite a majority of the states already have a medical program. Do you think that might figure into it?
It could. This proposal is the first of its kind in Wisconsin, and it does have a lot of great groundwork that'll probably use in the future, like the expungement provision that they've added, which would expunge any previous convictions for possessing, manufacturing, or distributing anything less than 25 grams.
Well, that's really progressive. I really like that. This is something I'm seeing a lot of states get on board with, and I think it's something that's going to be happening in a lot more states that get on board and start to legalize.
Here's to hoping we see it in the future.
Yeah. But hey, Austin, did you watch the Oscars last night?
I saw bits and pieces.
So I don't know if you paid attention to this part, but for the first, 20 or 30 minutes of it, you saw a lot of celebrities, directors, actors walking along the red carpet. And at the end of it, they were getting these little swag bags.
Oh, that's the one that's filled with hella stuff.
Yeah, all those cool treats and all that stuff. So let me tell you about this. It's a cannabis podcast, so let's tie it back in. These bags, for the first time ever, included things like THC chocolates, a VIP membership to LA's first consumption club, skincare products, and even a CBD spa treatment.
Wow.
I know, so it's just incredible. All these companies chipping in to get some of their goods out there to get some exposure for their product.
Makes a lot of sense. I mean, they probably get paid a ton to put their stuff in the bags, don't they?
Actually, it's quite the opposite. These companies are actually paying the Oscars to put their own products into these bags in the hopes that celebrities, when they use them, they're like them, they're endorse them, or at least publicly come out and say, hey, I really enjoyed my CBD spa treatment.
Yeah, it makes a lot of sense that you put it in the hands of the people that everyday people will see and then be more likely to use their products in the future.
Yeah, but hey, quick question. Do you know how much these companies are paying to get their products in these bags?
It can't be that much, can it?
$5,000 to $20,000.
Wow.
Now, the reason they're paying this much and totally okay with it is that they see a huge market that's growing in the U.S. Anxiety, for example, affects 18% of the U.S. population. That's approximately 40 million adults. And so all these products are designed in some way, shape, or form to help with anxiety.
Yeah, it makes a lot of sense. Like I said earlier, put in the hands of everyday people that have anxiety and be more likely to use those products.
Yeah, absolutely. This episode's about investing. We're going to have a guest on later who's got tons of experience in this field, so we made a special event just for him.
Unfortunately, we didn't make this event, but Flow Canna has now raised $175 million over the last 6 months, $125 million coming in their latest round of funding from Gotham Green Financing, which has now been the largest private funding round of a cannabis company in the United States.
Wow, that's a lot of green.
Yes, it is. And Flow Canna has been on the forefront of pushing this private funding forward. They are currently the largest cannabis conduit, so they bring over 200 farmers from all over the Emerald Triangle under one brand, and then they process, package, and distribute all of the product throughout California.
Real briefly, you mentioned the Emerald Triangle. Is that kind of like the Bermuda Triangle?
Pretty much exactly like that. So it includes Humboldt County, Mendocino, and Trinity. And while there have been, some horror stories and even a Netflix documentary about the region, they're known for growing some excellent cannabis.
Wow, well, interesting news this week. Thanks, Austin, for updating us on cannabis. For all of our listeners out there, make sure to like and subscribe. And up next, we're having an interview with the founding partner from a venture capitalist firm on investing. Coming on to our show today, we have a founding partner of Key Investment Partners, Jordan Youkilis.
Hey, Chris. Thanks for the introduction. Really excited to be here.
Yeah, well, it's a pleasure to have you on the show. So, you're a venture capitalist. Tell us what that is.
Yeah, absolutely. So, venture capitalist is, someone who typically will create a private fund structure and then go out and raise money from different investors, high net worth individuals and institutional investors who are looking to access private investments in an emerging industry. So, in our case, space that would be cannabis.
So, private investing has been huge for the cannabis industry. So what kind of cannabis businesses really need VC?
Yeah, it's a great question because, a lot of the entrepreneurs that we meet with are creating what we think of as more of a lifestyle business relative to a venture capital business. We see a lot of different opportunities in the cannabis industry, and, we really kind of think about them in two different buckets. So, lifestyle businesses, once it's up and running and it is in a steady state, has the opportunity to generate sufficient cash flows for the entrepreneur to, live the entrepreneurial lifestyle, set their own schedule, and be able to provide for their family. And we think those are great businesses, but they're not necessarily the type of investments that venture capitalists look to back. And the reason for that is, as a venture capitalist fund, we are mandated by our underlying investors to generate returns, far in excess of what could be achieved by investing in public asset classes like stocks and bonds. And so in order to achieve those types of returns, we need to find companies that have the potential to, achieve massive valuations at their exits. So we look for things like, massive scalability, competitive and sustained long-term differentiation, high margins, as well as the potential for high free cash flow conversion. And when we think about, businesses that have these types of characteristics, we really understand that the majority of companies that are in the startup space, especially in a complex and ever-changing industry like cannabis, the majority of those investments will either fail or return cost. So for us to really get comfortable investing in any given business, we really need to see the opportunity for what we consider home run potential, or the opportunity for that company to return all of the capital that we're deploying out of our entire fund.
Do you have any examples of cannabis businesses that you would fund or that have been funded by VC before?
Yeah, sure. I think a lot of the companies in the space that have gotten funded are in the ancillary space, given that, number one, there's less regulatory complexity for ancillary businesses, but also, companies that are, software focused, like there's a number of point of sale systems, seed to sale tracking companies, as well as, different compliance software companies that have gotten funded by VC. And the reason for that is, software typically it has, very high margins, call it 20% plus. A lot of, the best software providers enter into long-term contracts with their customers, which provides them with predictable and recurring cash flow generation. And, software is very scalable, right? It's kind of once you put in the infrastructure and dedicated the developmental resources to building your platform, to go from one customer to 200 customers has minimal incremental cost. So that's why, those are the type of companies that have seen a lot of success getting funded in the cannabis space. And that's also why, traditional VC in Silicon Valley has tended to focus predominantly on technology investments.
Yeah, I can see why that space has been so successful and will continue to be successful. I know just for us personally, Ohio State is sponsoring a CannaBiz Sprint, which focuses on getting some funding for some ancillary businesses in Ohio, which doesn't have a ton of VC opportunities available at the moment.
I'm actually from Ohio as well, so it's great to see that, there's a lot of great companies coming out of the state and getting into cannabis, and, hopefully the legislature in Ohio catches up soon as well.
But I do have a question for you, Jordan. Let's say, for example, I'm a software company in the cannabis field. What are some things I should do before speaking to a VC firm?
Yeah, it's a great question. And I think it again kind of gets back to, what level of funding you're at, right? Because if you're more of a seed idea where, you're pre-revenue, or, you don't have any customers yet, or maybe even just a concept, then you're really going to want to focus on, reaching out to other angel investors who are looking at cannabis. Because, for a VC fund to really be interested in investing, as I mentioned earlier, any opportunity should really have the ability to return the entire fund. And, when you're at a seed stage, while you have outsized returns because you're getting in at a better valuation, the risk profile is much higher and your opportunity to deploy a lot of capital is more limited. So I think if you think about it, right, if we have a $50 million VC fund, if we're going to invest, $250,000 into a seed company and make 20 times our money, well, that's a great return. It's only 10% of your entire fund, right? Versus if we were to invest, $2.5 million in a Series A round and make 20x, then we've returned the entire cost basis of our fund. And so I think, before you really start targeting VC investors, you need to be of a scale where, you can really demonstrate traction and the potential for revenue growth in order to be able to access those types of investors.
Okay, so just a quick recap on that. It's probably a good idea to have some experience beforehand and have some demonstratable results already. So you can go up to this firm and say, hey, our business has been around for, a few years, few months, but this is our product. We've had success with it already.
That's exactly right. And, to give you like a more of a tangible example of why this matters, right? So there's a VC fund in Silicon Valley, Andreessen Horowitz, which is one of the most reputable tech investors, right? And so they actually invested in Instagram seed rounds and ended up making 312x return on that investment in less than 2 years. Fantastic returns. However, because it was a seed investment, right? They only invested $250,000 out of a $1.5 billion fund, so it didn't really move the needle in the long run, right? So that's the equivalent of you saying, "Hey, key investment partners, here's $100," and us coming back to you and saying, "You know what? We took about 2 cents of that $100 and made one of the best investments you've ever seen, and here's $5.20." It's a great return at the end of the day, but it doesn't really move the needle on the fund. And so that's why it's so important, as we think about what investments to look at, the ability to, for us to really deploy a meaningful amount of capital is so critically important. And, at the end of the day, right, for a venture capitalist firm, our most valuable resource is time. And for us to do diligence on a seed stage investment where we can deploy a tenth the amount of money that we can in a Series A or Series B opportunity takes just as much time. So it just doesn't make sense for us to really spend our time focusing on those types of investments.
Well, thanks for starting off with some of those insights. We're going to take a quick break and be back with Jordan in just a second. We just want to remind all of our listeners to like, subscribe, and share this episode. And we love reading comments, so feel free to leave some down below. And we'll see you in just a second. Coming back to our show, we have a founding partner of Key Investment Partners, Jordan Youkilis. Welcome back.
Hey guys, thanks for having me again.
Thanks, Jordan, for being on the show. So one thing I want to kind of parse out a little bit more is the difference and distinctions you are making between lifestyle and venture capitalism entrepreneurs. Can you kind of tell me the trade-off between the two?
Yeah, absolutely. I think at the end of the day, it's kind of, why are you starting a business in the first place, right? Are you starting it predominantly because you just really want to set your own schedule? You want the flexibility of being your own boss and running your own business, and you find that exciting, but you're not necessarily as concerned about making massive economics on an exit by eventually selling the business or potentially taking a company public one day. And so, I think there are very clearly trade-offs between both. I mean, your upside potential with more of a growth venture-backed business is higher, but, you're also going to be taking on outside investors who are going to want to be following up with you at least on a monthly basis during board meetings and knowing that you're performing well and that you're growing and that you're being a good steward of their capital, right? Whereas if you're running a lifestyle business and you don't have to take on outside investors, or, the outside investors you do take on are close friends and family, an annual dividend that is maybe a little bit outside of what they could have made on the public markets, then I think that more of a lifestyle business is really for you. And I think it also comes down to, what business model you're looking to start, right? I mean, if you want to open a dispensary and, maybe eventually have a couple dispensaries in your chain, that's great. But, in the cannabis market today, right, there's just enough existing dispensary chains, there's enough vertically integrated players that it's just not really an exciting or unique opportunity for venture capitalists to look into. And so, I think kind of circling back on, some of the things that we look for in investments, right, is where are we really seeing new and unique opportunities that are taking advantage of the opportunity in cannabis and finding new and exciting ways to do that. And I think a good example of that would be a company that we invested into, last year called Lexaria.
If you're trying to just make a comfortable living or even trying to be successful in the cannabis space, you can do that without venture capitalism. But if you really want to take your business to the next step, like you said, maybe go public or doing something really innovative, that's when we need someone like you to kind of come in, help guide them along and keep them on track for the explosive future that they could have.
That's exactly right. And so I think, why I mentioned Lexaria is I think it's a really good example of why it's important for us as venture capitalists to kind of think about the next level of where the industry is going and kind of where we can find more unique business models, right? So it's pretty common knowledge that within cannabis, edibles is one of the fastest growing subsectors. So, while flower is still growing in terms of total volume, you're seeing consumers shift more and more heavily away from flower. The growth rates of both concentrates and edibles are growing faster, right? So as an entrepreneur, maybe you say, okay, well, let me start a new edible brand. But then, when you look at the market today, it's extremely hyper fragmented. It's very localized in each different legal market. And so while we think edible brands are a great opportunity longer term, it's a little early today to really be able to determine which ones are the winners or the losers. Ooh. So now, enter a company like Lexaria. What they do is they've created a biotechnology that makes it so that edibles hit your system more fast. And so, there are numerous benefits to their technology, but one of the things that we really like about it is they then out-license this technology to various edibles brands, which, from a business model perspective is almost 100% gross margins.
Oh,
right? So we love that fact because that means that for every, additional dollar of revenue that they generate, the vast majority of it falls to their bottom line. And the other benefit of that is because they're out licensing this technology to numerous different edibles brands. It allows us to play the theme of, the edibles subsector growing at a very rapid pace, but to take a more diversified approach and bet on the edibles subsector as opposed to investing in a specific edibles brand.
Okay. And Jordan, coming from law school, one thing our professors do a lot is have hypotheticals. So I'll admit right now I'm a little partial to them. And so I'd like to give one to you. Let's say, for example, I have a startup business right now and I'm already in the lifestyle phase of it. It could be edible software. At what point would I need to start looking into VC?
I think it's really when you find that you're not generating enough cash flow to grow the business at the rate that you really want to, right? So if you're, currently in Colorado or Washington and you'd like to expand into California and you just simply aren't generating enough cash to have those resources, and that's the kind of time that you'd want to look to reach out to outside investors, and I think a lot of the reason that entrepreneurs in cannabis today have been, more inclined to reach out to VC investors than maybe in more mature industries is that because the market is so nascent, it's kind of still up for anyone's grabs, right? And so people see that they have a successful product or a successful business model and they want to expand it as rapidly as they possibly can.
Okay, and then for a state that's coming on, a new state, let's say Wisconsin, for example, they passed their medical bill. Would you see more opportunities in states that are just coming online, or would you look for states that already have a solid foundation?
I think, again, it gets back to what exactly is your business model that you're looking to create, right? Like if you're looking to become a cultivator or a vertically integrated player in a limited market, in a limited licensed market, then I think that could be a really interesting opportunity. But if it's a new state that's coming online that has a pretty small population size, like Maine or something, then it's maybe not quite as attractive just because your upside is capped. So dependent on which specific market you're talking about and what your specific business model is that it's hard to give a blanket answer to.
So I want to go back to Chris's hypothetical for a second. So you talked about how as you're moving from like the lifestyle, from your friends and family investing in it to looking for, VC funding, which kind of fund should you look towards? Are all VC funds the same, or is there like demonstrable differences between them?
Again, because cannabis is such a unique beast that depending on your business model, it really does determine which investors you even have the potential to raise from, right? So, there are, a couple dozen cannabis focused funds that are, out deploying capital today. A number of them will only look at ancillary businesses at all. So if you're a plant touching business, certainly probably not the most efficient use of your time to go after those folks. And then, if you're on the ancillary side, you're starting to see more and more traditional venture capitalists, looking at those types of opportunities. However, a lot of the more established firms in Silicon Valley have what are called vice clause restrictions, which means that they're prohibited from investing in any type of what's considered a sin-related industry. So cannabis, alcohol, tobacco, firearms, that sort of thing. So again, it is difficult in cannabis to find investors relative to other industries, but that said, certainly not impossible if you're, a dynamic and intelligent entrepreneur with a great business idea. And then, to your question about are all VCs the same, that's certainly not the case. And, what you'll find, especially for the folks running the most successful businesses, is that, capital is a little bit more discretionary from their standpoint in terms of who they fundraise from. So, I think it really makes sense to, as you're going through the fundraising process, to also do your due diligence work on the VC funds that you're potentially going to take money from and, speak to their other portfolio companies about what it's been like to work with them. Are they going to be more long-term focused and help you grow your business for, the next 5 to 10 years? Or are they very short-term focused and want to generate immediate cash flows for their investors, right? It's a very different way of thinking about things. And so before you get into bed with anybody, make sure that you really understand, exactly what type of investor you're working with.
Let's say that you do meet a VC firm and they do give you funding. Are there any strings attached to the funding, or can a business just go wild with it?
Yeah, that's a good question. I mean, anyone who's fundraising, right, should certainly have a very detailed plan of how they're going to deploy that capital and what uses they're going to use it for. And I think any venture capitalist understands that, in an industry that's evolving and changing so rapidly, right, your projections and plans 2 months ago might have to be vastly different than what they are today. But that said, I mean, your backers are going going to be checking your books and making sure you're deploying that capital in an intelligent manner. So if you completely misappropriate or use those funds for something that you said you weren't going to do, I think that's going to cause some very serious issues. Most successful and growing venture-backed businesses, you're going to look to raise more capital in future fundraising rounds. And so if you create a pretty toxic relationship with your current investors, they're likely not going to double down and invest in your subsequent funding rounds, which is a really negative sign to the market and other potential new investors who would maybe be willing to invest if they see that, your existing syndicate does not want to double down on their investment.
Okay, so to analogize it to something a little more prevalent, it's kind of like a credit card report. With the more responsibility you have, the better decisions you make, the more likely future VC funding will occur.
Yeah, that's a good way to think about it.
Okay, well, I feel like I've learned a lot today.
Yeah, I mean, how, which kind of funding you should go after, whether you need to pull money from friends and family, go after a comfortable living, or if you see your business as the next big thing or something that could provide a lot of benefit and a lot of capital for tons of people, across the country or the world, and then what kind of venture capitalist firms you should look into, and to make sure that you're well prepared when that opportunity arises so that you can be prepared for everything in the future.
Absolutely.
Thanks, Jordan, for being on the show. I really appreciate all the insights that you had. So, Jordan, just one last question for you. What's the best way for people to get in contact with you that are interested in VC funding?
Yeah, absolutely. They can reach out to us through our website, www.keyinvestmentpartners.com, or can contact me directly at jordan@keyinvestmentpartners.com.
All right, perfect. And for our listeners out there listening, we'd just like to remind you to subscribe and share this podcast if you enjoyed our content. I'm Canna-Chris, also known as Chris Nanny.
And I'm Austin Slutsky.
And we'll see you next week.